So essentially, a company would announce their earnings report of their specific their revenue and their quota for that specific quarter, right? And so essentially, what ends up happening is, depending on the market sentiment of what the investors believe that company is supposed to do for that quarter, then the stock would either rise, 10% or fall 10%, right? So if you were to decide to buy a contract or many contracts of a specific company right before they announce their earnings, then your contracts actually go like 1,000% in a day. Like, you would literally make 1,000% gain in a day. So my strength is, it depends on the seasons. I usually am better at doing scalp trading. I like momentum trading. What that means is, essentially, you're watching the market and looking for specific trends right in the market. Then there's another one of my strategies, which is called earnings plays. Right? When Zoom first reported their earnings, right? This was back in 2020. When Zoom did theirs, they had contracts of $400, right?
What I mean by that is, like, in the market, you have retail traders like you and I, right? You have hedge funds. You have, people who have a lot more money than you and I, right?
All we're doing is waiting for it to break that price point, resistance point. Right. So that's kind of how you got to think of stocks.
When did it click to say, yo, this is all I'm doing? Before this, you weren't like heavy investing.
I should just be like, bro, like, this ownership stuff is really dope. Yeah. Until I realized, like, Ford was a bad business at the time. And I remember the first stock I bought was Ford.
What was the first major company that you invested in?